RBI's Monetary Policy Committee announces a repo rate cut by 25 BPS, which means the new repo rate stands at 6%, is what we are learning. Well, it's a slash on repo rate and it now stands at 6%. This has been announced by the Reserve Bank. It's a big development. This is 25 basis points. This is announced, and which clearly means that EMIs essentially for home loans will be coming down in a big way. I'm going to go straight across to Sakshi for more. Sakshi, this was but expected. Loan borrowers now looking forward to lower EMIs. Just tell us, how will it translate for an average person who's taken a loan?
First, let's get to understand what has happened. The repo rate is the rate at which the RBI lends to banks. Now, what happens is that this will encourage borrowing. More banks will be looking at lower interest rates as a key point to probably borrow more money from the RBI, and therefore that will also encourage them to further reduce the lending rates for people like you and I. Whenever we go to banks and we look at borrowing from the banks, they are at a better leverage to give us or pass on this reduced rate cut for them to the consumers. So that is likely to happen now, because this is for the second time in a row that the RBI has now gone ahead by slashing that 25 basis points on the repo rate. This is the first fiscal policy, monetary policy for the fiscal year 2026, and this was of extreme importance to see. It was largely being expected. Most of the economists had already penciled it out. This has been a unanimous decision by all the 6 members of the Monetary Policy Committee, and they've also changed the stance from neutral to accommodative. That actually hints at more easing of policy could be coming in if the situations warrant as well. The second time in a row, so we actually know in the last 2 months or we have actually seen a 50 basis points of a reduction on the repo rate. So that's good news coming in. Remember, this was also of extreme importance to see, because now inflation is at a more comfortable zone that we had been seeing over the last 6-8 months or last few years as well. It's now come below 4% mark, which is a more comfortable zone for the RBI. And that's what the governor, Mr. Sanjay Malhotra, has already indicated as well. He's also saying that at this point in time, what is of more importance is to see how the external environment is going to be playing out. He did talk about tariffs. He said FY26 has started on an anxious note. He is keeping an eye out on what is happening on the external developments. What will happen to tariffs? Remember, what will happen as the future course of RBI will depend on what will be the inflationary impact of Trump's tariffs trade war. In case there is a heightened concern on worldwide inflation, again there have to be seen as to how RBI will move forward with their decisions on the rate front going forward from here as well. Remember, he's already pointed out the external environment is very, very volatile at this point in time, has exacerbated uncertainties is the word that he used in the initial comments as well. Remember, of course, the speech is still on. We'll also get to see what else he has to say on the growth front at this point in time. Remember, we have been seeing Goldman Sachs and brokerage houses, worldwide agencies already revisiting their own expectations of global economy growth as well as growth for Indian economy as well on a lower trajectory, looking at what is happening worldwide. So all of those comments will also be coming in, and we will keep you posted on all of that.
All right, Sakshi, I'm going to leave it at that. Sakshi getting us up to speed with those details and explaining to us what this really means amid global wars also, which are ongoing as far as the repo rate and the slashing of it is concerned. Sakshi continues to be with us. The RBI cutting the repo rate by 25 basis points. At the end of the day, some relief as far as those who've taken home loans are concerned. EMIs would be definitely, in fact, getting cheaper is what Sakshi is telling us. Repo rate, like Sakshi was telling us, is the rate at which the RBI lends to banks. We have details of the RBI alert over the ongoing trade wars as well. Right now, we're talking about some relief as far as the repo rate here is concerned, with the central bank cutting repo rate by 25 basis points to 6%. Home loans likely to get cheaper. So some cheer amid all the gloom that we've been seeing and the uncertainty, if not so much the glooms. Sakshi.
Absolutely, Sneha. So just like how I pointed out, RBI Governor did say that the RBI will be on alert to look at what is happening worldwide on the tariff war. Remember, today at 9:30 a.m. IST is when the tariffs that were announced on April 2nd have gone on course on 180 countries, including on India. The 26% tariff that was announced by US President Donald Trump has gone into effect as well. Of course, during all these last couple of days, US President and the White House have already initiated, released a statement saying that 70 countries have approached them on negotiations, on some kind of a talk on tariffs as well. We are given to understand that even India has taken a negotiatory approach, whereas there are some nations like China which have taken a retaliatory approach. Looking at that, US President has again talked about additional 50% kind of tariffs on China, which actually makes it a cumulative 104% as well. Now, this is when two large economies get at loggerheads on the tariff front. Looking at this, RBI Governor Sanjay Malhotra has said that the RBI is on alert. We will be watching out for as the situation evolves around tariffs, and if it warrants any more action from the central bank, that's where they will be looking at when is the appropriate time to look at some more actions at this point in time. Remember, in case there are any impact that we can expect on inflation and on growth, we will have to see what the RBI really does forward from here on. Right now, the inflation situation is under control, and which is why they felt it right to cut the interest rates. Cutting of interest rates will actually mean that the banks will have more leeway to give the borrowers a little more easing on the interest rates or the lending rates at this point in time. This will ensure more people from us will be able to borrow more money either for home loans or for auto loans at this point in time. There's also an added on bonanza. Let me remind all our viewers of India Today that 1st April onwards, the budget announcements have also kicked in. The budget announcements were made by way of tax cuts. A huge tax bonanza was introduced, and people with the incomes of less than 12.75 lakhs have to pay no tax now. So that added on with interest rate cuts will actually probably prompt more people to go ahead and borrow more money for car loans, for home loans as well. So that's something that we will keep an eye out on. Today and tomorrow, there could be some announcements from the banks. We're looking at SBI to announce first. Any kind of slashing of the lending rate will definitely ensure that you pay lesser EMI from something that you had been paying for. Remember, we had been holding on to high rate interests for the last 4 to 5 years. That situation is slowly and gradually changing. At least in the last 2 months, or we've already seen twice 25 basis points each, cumulatively a 50 basis points of a slashing on the repo rate front.
It's right. Sakshi, be with us. The thing here is that it's a mixed bag today because there is more news coming in, and it's got to do with India's GDP forecast made by the RBI. The central bank talks about our GDP forecast for financial year 2026 to 6.5%. Our earlier GDP forecast was 6.7%. RBI here, Sakshi, obviously seeing marginal impact of Trump tariffs. I think this is fairly conservative. I'll come back to you, Sakshi, in a moment from now. Listening to the RBI Governor first.
After a detailed assessment of the evolving macroeconomic and financial conditions and outlook, the MPC voted unanimously to reduce the policy repo rate by 25 basis points to 6% with immediate effect. Consequently, the standing deposit facility, the SDF rate, under the liquidity adjustment facility shall stand adjusted to 5.75%, and the marginal standing facility rate, or the MSF rate, and the bank rate shall stand adjusted to 6.25%.